Hey, I'm Cameron with Check Bookkeeping. I work best with real estate investors, fix and flippers, wholesalers, rental owners to help them stay financially organized with clean, accurate financials within QuickBooks Online. In this short demonstration, I'll walk you through how I customize your QuickBooks Online setup based on your investment strategy so you always know where your money is going and how your properties are performing. So for any accounting software, we always start with the chart of accounts. Chart of accounts is your foundation of your bookkeeping. It's basically your filing system where all of the money buckets are going to. So we always base your chart of accounts, whatever is your investment strategy, we customize it in that way. So everyone's accounts will be a lot different. Wholesalers, rental owners, flippers, they all need different ways of tracking their money. For instance, wholesalers, they need a much leaner set of chart of accounts. They might only be tracking their wholesale assignment fee income, realtor costs, advertising. A lot of wholesalers love to keep track of their advertising to see what their return on investment is. However, for rental owners, they want to keep track of all of their fixed assets. So that's going to be the land, their buildings, their closing costs, capex, depreciation. So a lot of rental owners, they love to work with their tax professional throughout the year for tax planning. And they also really love to invest in what's called cost seg studies. So these cost seg studies allow you to really break down a building into specific parts that can be depreciated in an accelerated manner, which allow you to take higher amounts of depreciation in the beginning. So this can be huge when you're trying to offset your active income to bring it down lower so you can owe less in taxes. Depreciation is a huge aspect of real estate investing businesses. So in order for us to do that, we need to keep track in different buckets of capex so we can depreciate it in the correct manner based on what your cost seg study is. Next, I want to talk about flips. So flips is going to be even more different because none of that stuff can be depreciated. So a flip property is basically you're taking on a rehab, you're taking on a distressed property, or it's a brand new property, you're just getting the land, and then you're rehabbing it and building out a finished property that's livable. All of that stuff needs to be tracked under inventory. All of the costs, expenses need to be tracked as an inventory asset. Nothing can be expensed as a direct cost for that property until it's sold. So we have to keep track of the purchase price, buying costs, holding costs, loan interest costs. All that stuff needs to be in inventory. And then when we sell it, we have to account for those selling costs as well. And then we count all of that stuff and send it out to cost of goods sold. So whatever you sold the property for, minus all of your cost of goods sold or COGS, will yield you your gross profit for that flip. So on that case, I actually want to talk about how we keep track of flips. So we keep track of flips a little bit differently than we would a rental. So each flip will be considered a project. So we require the customer to have at least QuickBooks Online Plus to get the projects feature. Projects feature is essentially a dashboard for your flips. So it'll tell you exactly all of the costs that you put assigned to that project will show up on this dashboard here. So when we finally sell the property and we send everything to cost of goods sold, and then we realize the income that was received from that flip, it'll tell us what our actual profit margin will be. So in this case, we sold a flip for $240,000, and all of the expenses, of cost of goods sold, ended up being $217,500, and that yielded a profit margin of 9.4%. So that's not a great percentage. And there's no way for the real estate investor to really have known that because mostly they only looking at their bank account, which is not a good indicator. They need to be looking at these costs and their income in comparison using this profit margin. So the real estate investor would have never known that if they didn't actually see this dashboard and this breakdown. So most real estate investors, flippers, they really want to aim for a 25 to 35% profit, gross profit margin. And that's how you know that you're doing a pretty good job. Anything lower than that is you're not really getting a good return on investment. So next I want to talk how we keep track of all of these transactions. So mostly it's going to be done on the bank feed. So we will be helping you connect your checking accounts, your business checking accounts, your business credit cards, savings accounts, Profit First accounts. All of that stuff needs to be on your QuickBooks Online profile, and all of the transactions need to be fed into QuickBooks. And we would simply just be going to each transaction and categorizing it in the correct way based on how we set up your chart of accounts. So for instance, we would be doing proactive journal entries on your behalf. So whenever we receive HUD statements, we'll be transacting it as a journal entry to capture all the information on the HUD. So those acquisitions, dispositions. So in this instance, this is earnest money deposit. So, in April 15th, we had an intention of buying a flip property. In order for us to hold that property, we needed to put down a deposit. So this is usually called an earnest money deposit. So we had to wire $2,000 to the law firm in order for us to hold that property. So we've already did that journal entry. Now this is it coming in through the bank feed, and all we would need to do is simply match it to that transaction. Now this is the actual acquisition. So this is us actually purchasing that flip. So now we're purchasing. The HUD statement ended up showing that we had to pay $100,000 in cash to closing. So we've put everything from that HUD statement onto a journal entry, and now this is the actual expenditure. So this is the actual $100,000 that we actually did pay. So we already have that transaction in QuickBooks, and all we're doing here is matching it. This is just an example of when we receive some rent. So in the event that we receive some rent, say we're using Baseline for our tenant portal. So we would check in. This is the rent amount that we received, $13.39. We need to make sure that we know it's going to the correct property. So we have all of our rental properties listed as customers to keep track of it in a concise manner. So we're going to go to whatever the property it belongs to as the customer. We would change the account to ensure that it's rental income and not any other type of income. And we want to make sure that it goes to the correct business. So on our chart of accounts, if we have a real estate investor that has a high rental portfolio, a lot of real estate investors will have multiple LLCs. So for each property, they're going to have their own LLC. And then at the top level, they're going to have a holding LLC. So as long as everything is the same type of business, all affiliated with each other, they're all owned by the same people, we're able to keep track of all of those businesses, disregarded entities in one QuickBooks subscription, as long as we're using QuickBooks Online Plus. So it's a great feature to help streamline your bookkeeping, to ensure that you don't have a lot of different QuickBooks subscriptions you have to keep track of. But as long as it makes sense, they're all rental disregarded entities, we're able to keep track of it in this manner. So it makes things a lot more streamlined, and the reports are going to be a lot more succinct. So we want to make sure that we send this to the correct business as well. All right, next I want to show you your reports. So these are your deliverables, the most important part of bookkeeping. They show you the final numbers after all the work has been done. So each type of report is going to look a little bit different based on the investment strategy that you're using. So we can start with rentals. So rentals are going to keep track of your full portfolio or on an individual level. So as mentioned before, rentals, a lot of rental owners have each of their rental properties in one LLC. And at the top will be their holding LLC. So that's going to be holding all of those disregarded entities below them. So we're able to keep track of that in one QuickBooks Online subscription, as long as you have the Plus subscription. And we keep track of each business, so each of these disregarded entities, as a location on QuickBooks Online. So we're able to keep track of it all into one subscription and make sure everything is segmented and separated on their balance sheet. So for instance, we're going to look at a full portfolio as a balance sheet. So it'll show you all of your rentals within this one balance sheet as you're holding LLC's balance sheet, you'll see them differentiated by column here. So these are two rentals within this holding LLC. So it'll tell you the actual land that's attributed for each, the buildings, if there's any capex for each individual property, any loans as well, and it'll tell you your equity. So your member contributions and distributions will be differentiated by property. This allows you to keep accurate and actionable financials. So as you're reviewing these financial statements each month, you're able to see where you are within each of these businesses. So we're also able to get you reporting on an individual level. So just in case you want to see, each individual property's performance, seeing how much rent they're collecting, how many expenditures that each individual property is getting, we're able to get you a profit and loss based on each individual property. For our profit and loss statements, we like to categorize it by month, so you're able to see throughout the entire year and compare and contrast from month to month. So for instance, this would be a December 31st profit and loss statement for this 852 Maple Avenue LLC. So it'll tell you all of your rental income that's been received in that year, and it's also going to give you all of your expenditures. So this will be the statement that you provide to your tax preparer in addition to your other profit and loss statements for your other properties, so he can follow your Schedule E. Because as Schedule E, you need to differentiate by each property that you own. So next I want to talk about how we handle flip businesses. So flip businesses are not going to have all of these multiple disregarded entities because they're not fixed assets. They're holding inventory. So it's important to know where you are within your flip business. So you'd be receiving this balance sheet every month. And this balance sheet will tell you how much you have in purchase price. So this likely can be two different properties, multiple properties. It'll give you a summated amount within each bucket. We're able to get you individualized balance sheets and for balance sheets for your entire portfolio. So you can see how much you have in each particular flip. So this balance sheet will tell you how much you have in your inventory, any PITI escrows, any hard money loans, creative financing loans, and of course at the end of equity, it'll show you any joint ventures that you have, who has what equity within the business based on the books, so on and so forth. So in addition to that, we also provide profit and loss statements for flips. It'll look a lot different than a rental. Rental will have consistent income throughout the year as long as it's been rented out. But for flips, you're going to be doing a lot of rehabbing. You're going to be doing a lot of holding costs for each flip. So that's going to be more consistent throughout the year. And when you finally sell the flip, that's where you're going to show the actual expenditure and actual receiving of the income. So I did want to jump to this. This was actually the same property that I showed you on the projects portal. It'll show you that the $240,000 here that it was sold for, and these were all of the cost of goods sold that we ended up expensing after we sold the property. And this is the gross profit, so the 9.38%. So if you remember from the project, 9.4% profit margin. So we're able to see all of the flips from the dashboard. All of this information will be transposed from your reports as well. So you're able to see it in two different places. So you're also able to see where these numbers are actually coming from. So my goal is to give you peace of mind with accurate numbers so you can focus on growing your portfolio and you're not managing multiple spreadsheets. We help you build solid systems to stay 1099 compliant, keep your documents organized, and not just receive your financial statements, but actually understand what they mean for your business. So if this looks like the kind of support you need, let's schedule a call and talk about getting your books in order.